This is something that has been around for a long time, but I think we have a unique use for it now that maybe we didn't have in the past. And what an accountable plan is, this is specifically enumerated in the IRS law. That basically says that you can give people allowances for certain expenses, and without actually them showing you receipts on a month-to-month basis, and you can reimburse them for certain things so long as they are accountable for them at least once a year. And there's some other rules in there as well, but let me kind of explain to you what this is from. So a lot of times you'll see this in the past. We've seen this through, let's say, salespeople or people who use their own car for business substantially. And let's just say someone has you give them if you have a plan and you give them a $1,000 a month auto allowance, okay? So they would just get $1,000 in their check, not taxable, every month. And then at certain times during the year, sometimes it's 4 times a year, sometimes it's 1 time a year, they have to settle up and show you on a piece of paper, written, that they had actually incurred that much in deductible expenses. So let's just use that example of salesperson. If you gave them $1,000 a month over the year, you give them $12,000. So long as they were able to justify back to the company that they used those, at least had $12,000 of business auto expenses, the company can write it off, and the employee does not pick it up anywhere on their tax return. Okay, so that's what a typical accountable plan is. There's a lot of different expenses you can use under an accountable plan, but automobile is one that's probably the most commonly used. Now this year, I think we have a whole different set of facts based on COVID. And I think there's a great opportunity specifically for business owners here to have an accountable plan and to reimburse themselves for some type of, I will use it generically, I will call it the business use of a home, okay? And let me talk to you about some situations where in the past, maybe people weren't, they didn't full-time work at their home office, but because of all that's going on, they have done that. So some things to think about. You put in an accountable plan to reimburse yourself for a portion of all of the expenses to run that home, okay? That includes utilities, repairs and maintenance, snow removal, lawn care, landscaping, painting, insurance, homeowners insurance, all the cable TV, all those expenses, a portion of those, okay? Now here's where the applicability is maybe different this year than in past years. I'll give you a couple of examples. First example is this. We had somebody who had a rental home right outside of Disney, and it was typically rented. And back when this pandemic hit, all of a sudden everybody canceled all their all the reservations. So the place was sitting empty. And this person had to lived in New York and had to work from home. So after a few weeks, they decided, hey, let's just go down let's use the house right by Disney. The weather will be warmer, right? I think at the time they were basically running away from COVID because COVID was not nearly as bad in Central Florida at the time as it was in New York. So they went down there for a couple months, and they used it for business purposes. And I think we can go ahead and that's a situation where you can deduct some costs that you could not have in the past. And I think the issue is effectively we're trying to shelter or get away from COVID. That's a legitimate business expense. So I think that's one way you could use it, okay? Another way you could use it is we had a client in Philadelphia who they had to get out of their office. So they haven't been in their office since this whole thing hit, probably back in April, right? Nobody's been in their office. So everybody had to work at home. So one of the things that these guys did is they had a home on the Jersey Shore. So they went there for a couple of months to kind of shelter in place, if you will, there. Because once again, they had the same thing. A bunch of people had canceled. So a portion of those expenses too could be deducted. I think they were there for 2 months. So there's some different situations this year that could legitimately be deducted, or you could have the company reimburse you. Another situation would be, let's just say you worked from home more this year. I would say most people probably worked from home more this year than in most years. And you could go ahead and once again, get reimbursed for a portion of all those expenses I enumerated earlier as well. So the idea is you could do this now. You have to have the accountable plan in place. It's just a 1 or 2 page plan. It's very easy to do. and then you can reimburse yourself. So let's just say those costs were $6,000. You could write a check out of the company to yourself for $6,000. You don't have to pick it up anywhere on your individual return. It's fully tax-free money. So it's a good thing. It takes a little thinking, okay? Most of the people I've talked to about this, when I first talked to them about it, they thought they really underestimated the total costs to run that home, whether it was their primary residence, a secondary residence, or a rental property. But really, once they put pencil to paper, they realized the actual expenses were substantially higher, and it really turned out to be, a better benefit than they initially had thought.